Hi and welcome to another edition of our weekly market outlook report for the week starting Monday the 23rd of March. We have just left behind us yet another volatile trading week where global equity markets closed in red. Equity indices like S&P, Dow Jones, Nasdaq, DAX, FTSE are all trading in negative for the week. Additionally, we saw a massive volatility in US dollar currency, which translated in volatility across FX pairs, also commodities like gold and oil. We are heading into a quieter week ahead of us in respect of economic data releases. So the week will start with fairly slow economic data releases on Monday. On Tuesday, we should be on the lookout for UK, Eurozone, and also US services PMI figures. Going forward, UK consumer price index figures, US durable goods data, crude oil inventories will be closely watched on Wednesday. On Thursday, the main point of interest is reserved for Bank of England interest rate decision and minutes, UK retail sales and also US jobless claims, and GDP quarter 4 data is scheduled for release. The week will finish on Friday with US personal consumption expenditure and Michigan consumer sentiment figures. Now let's take a look at few markets. This is euro dollar in 4-hourly intraday time frame. We can see the euro dollar currency pair was heading lower, downtrending, falling below 20, 50 and also 200 period moving averages, and it's currently trading below this falling resistance trend line. This is translating to substantial US dollar currency strength and euro weakness. The key trading level going forward is at 108, 107.90, which is this horizontal here, cluster of the previous lows from the 20th of February, also the S2 in pivots, and it's also fairly close to the trend line. So if we see a rally from the current lows into this resistance and a rejection from there, that would further support bearish outlook, opening the way for an extension to the downside towards 106, 105.80. Loss of 105.80 could target 105. Some longer term analysts are possibly looking at 103.50. Alternatively, if we see an oversold bounce back and rally into 108, a breakout above that level and the retest of that level from above as a newly found support, that would create a short squeeze or a counter trend breakout higher, targeting additional resistances towards 109, 109.80, breakout above that 110.50, which is the cluster of these lows. Only the breakout above 110.50, 111 could target 112, 112.30 on the upside. Sterling dollar also a multi-year lows here, substantial selling pressure in sterling dollar. Yet again, US dollar strength, sterling weakness. We are seeing something that looks like a bit of a consolidation here at the moment. Key trading level going forward is 1.14, which is the cluster of these lows. If we see a rally into resistance, upside is capped by 1.20. If we see a rally into that level and a rejection, or if we see a gradual move lower and a loss of 1.14, that could open the way for a deeper retracement, targeting 112, possibly 110. Some longer term analysts are looking at 107, but it's uncharted territory, so very difficult for us to say. Alternatively, if we see a squeeze higher, some traders might be looking at this as a double bottom and a breakout above that double bottom. Then we could see a squeeze higher breakout above this, what can be assumed to be a neckline of the double bottom. So breakout above 1.18, retest of that level from above would create a double low higher low, and a squeeze higher. We could see a short squeeze because then we have a falling resistance trend line here as well, targeting additional upside resistances towards 120, 122, 124, possibly even 126. Dollar yen moving higher, no surprise yet again. US dollar strength, Japanese yen weakness. The price action is uptrending quite nicely intraday, supported by 20, 50 and 200 period moving averages, and also this rising support trend line. If we see a corrective pullback into support, which is at 109.60, and a rally from there, that would further support bullish outlook, targeting additional upside resistances, therefore an extension towards 112, 112.70, possibly even 114. So 112, 112.70, 114 on the upside. Alternatively, if we see a gradual pullback and the loss of 109.60, a retest of that level from underneath, if this is coupled by something that's considered to be a fundamental shift in US dollar, therefore a kind of a little bit of a weakness in US dollar, that could change the outlook, potentially opening the way for an extension to the downside towards 108. Break below 108 could target additional supports towards 107, 105.40. Gold appears to be coiling at the moment. We are seeing a triangular shape here. It looks like a symmetrical triangle that's developing. I am looking at this from the energy build-up point of view. You can see 1, 2, 3 touches here, 1, 2, 3 touches at the bottom. These type of consolidations are normally an indication of an energy build-up which precedes an explosive reaction. Now, if you see this in the daily time frame, you could see the daily time frame created the first green candle after a substantial number of selling days. From the intraday point of view, this still appears to be downtrending, yet again relating to the US dollar strength. The key trading level on the upside is at 1500, which is a nice and round number, and psychologically important level, 1515 on the upside as well. So if we see a corrective pullback, a loss of these lows below 1473, 1470, 1465, retest of that level from underneath, that would open the way for an extension to the downside, therefore more bearishness, targeting 1430, possibly 1400, 1390 supports to the downside. Alternatively, if we see a breakout, confirmed breakout above 1550, what I would do in that point is I would draw the Fibonacci retracement from the current swing high at 1700 all the way down to 1457, 1455 low, and I will be paying a special attention to this 23.6 fib retracement and also falling resistance trend line at 1550. So breakout above 1550, retest of that level from above as a newly found support, could create a short squeeze and an extension to the upside, targeting 1550, possibly 1580, 1588. Breakout above that level could target 1600, 1607, which would be this kind of zone of 50% fib retracement and 61.8 fib retracement from 1700 all the way down to 1457. So keep an eye on that. Gold is coiling. There'll be an explosive reaction one way or the other soon. This is crude oil. Yet again, loads of people paying attention to crude oil. We have 20% moves in crude on daily basis now. Key trading level is at these current swing lows towards 22. This appears to be a clearly defined downtrend. We can draw a couple of trend lines, either connecting this sequence of the lows and or this sequence of the lows. The price is currently trading below 20, 50 and 200 period moving averages. It's supported by 22 and it's clearly capped by 26.80, 28. If we see a gradual move lower, loss of these current lows, that could open the way for the retest of 20. And then take your pick, uncharted territory, 18, 16, 14 to the downside, bucks per barrel. Uncharted territory completely, but it does look bearish. Alternatively, if we see a breakout higher and the end of day close above 26.80, possibly $28 per barrel, that could create a short squeeze, creating an extension to the upside, targeting additional resistances towards 30, 31.70, possibly even 34. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.